For the bounce strategy, we do the following. For entry rules, buy stocks which have fallen 5% from the open of the day. So if Tata Steel opens at say 100, what price will you buy? Yes, that's right, 100 minus 5%, that's 95. For stop loss, we don't really use a stop loss because it's a high volatility trade, but you can use a 5% stop loss on your trade. The exits are always at 3:15 p.m. That's 15 minutes before the market closes, and that's required for intraday strategies to be closed at that price. We will only scan F&O stocks. So when you look for these bounce trades, make sure you look at only F&O stocks, but you trade in the equity segment. You can also trade them in futures and options if you wish. There are about 180 of these companies. Finally, we are trading intraday in equities, although you can easily trade in futures and options as well. If you're trading in equities, you could trade with even 2,000 rupees to test the system. That's the beauty of equities. You can buy even one share and see if it works for you or not. This will help you build some confidence without risking much money. And finally, we take 2 trades a day. We look to trade only 2 stocks every single day. Great, now that you know the rules, let's see some examples. This is my favorite part. So I've opened Karnataka Bank here and I've opened the hourly chart. I think you should look at the 10 minutes charts when you're actually trading this, but since I'm showing you old data, it's good to look at the hourly chart because it's easier to see. And this is the 23rd of June. Let's zoom in. This candle, you see, this is the opening candle of the day. The market opened here, plummeted all the way down, and that green line, yes, that's 5% below the open price of the day. So that's our bounce price. We would have bought here, held on during the day, and as you can see, the market nudged slowly upwards. During the last half of the day, it removed all its gains and then reversed back off. We would have exited at 166, and that would have been a decent profit. Simple trade, right? Let's see another example of Lupin. I will open Lupin in front of you and go back to the day when we had the trade. Here it is. It's already open on my chart. And you can see here that the market opened here, and from there to here all the way down, that green line, that's the bounce price. We would have bought here, the market would have fallen below and then reversed finally. We would have exited here. It's a small profit. It's only 0.38%, but hey, it's a simple strategy and it made money. Not bad, right? You'll notice that bounce days are very volatile. So when you get an entry, you might see for some time that you'll get a negative side on your M2M. This is completely normal. And again, I would recommend always trade small amounts with bounce since the movement is a lot on these days. Let me show you one more example of RCOM on the 31st of May. So let me go back in time and I'll see that the 31st of May is right here. That's it. You see that? That's the 31st of May, 2015. You'll see that the market opened here, fell all the way down. We would have bought somewhere here. We would have taken a temporary loss and then reversal. Beautiful exit by the end of the day. As you can see, bounce is a very simple yet effective strategy. Just go through all the F&O stocks. When you get the bounce trade, take it. And over 3-4 months, you will see good results. Remember, it's a very volatile system, but it works. In the next video, we learn some basic guidelines you need to know before we can begin trading bounce.